Hello, everyone. My name is Yi Zhu, Metals and Mining Analyst with Bloomberg Intelligence. And today, I'm glad to share with you my view on copper outlook through 121 Mining Investment APEC session. After the slump in the early stage of the COVID-19 outbreak at the beginning of the year, copper prices have been advancing all the way since the end of March, and market sentiment has also changed from concerns about downstream consumption to concerns about the tight supply of copper concentrate. As the epidemic spreads globally, the prevention and control situation is uncertain. After central banks around the world launched the large-scale monetary easing, it eased the panic in the financial market and the tension of liquidity, and also lead to the rebound of metal prices. Copper prices have been driven higher on tight supply of raw material, improving demand, and rising capital inflow. With copper prices continue to increase or start to fall going forward? That's a question I think everybody wanted to know. So in the next 20 minutes, I will analyze from copper's commodity characters, which are supply and demand, then move on to Dr. Copper's financial characters. On copper's supply side, we expect global supply of copper concentrate will be tight this year, but mined copper supply will start to pick up from next year. On the demand side, we expect global demand will fall this year, but China demand is recovering and will lead the global. Last but not least, we will look at global macro, which impacts Dr. Copper. Due to the COVID-19, the supply side impacts are mainly caused by copper mining countries such as Chile, Peru, Australia, Serbia, and the Philippines. After the outbreak of the COVID-19, some countries declared a state of emergency, and local mines closed to reduce the operation rate, lower output, or even pause production. The port shipments were all impacted. Therefore, in the first and second quarter, the output of world's major copper concentrate producing countries declined year-over-year. South African countries, Chile and Peru, are the largest mined copper producing countries with rich copper resources. When the outbreak began, Peru was the hardest hit. After Peru declared a state of emergency on March 15th, the operation of Freeport's Cerro Verde, MMG's Las Bambas, and Glencore's Antapaccay were all impacted. Then, Peru's situation improved, and the mining operation and port shipment gradually came back to normal level. But then, Chile was hit hard by the epidemic. So the concern of supply disruptions at copper mines drove up copper prices. We calculated that the COVID-19 caused about 500,000 tons copper supply disruption through mid-year, and the number may keep changing due to the uncertainty caused by the epidemic. We expect global copper concentrate output to fall this year due to mine disruptions, but the miners' profitability remained positive on lower diesel expenses, higher byproduct credits, and favorable currency swings. We expect global copper mine supply to drop 3% this year and will start picking up in 2021. Peru will lead the supply addition from 2021, and we expect it to grow 3% annually through 2026, mainly due to the three greenfield projects, Mina Justa, Anglo America's Quellaveco, and Southern Copper's Tiamari. There will be not much growth from Chile. On the right-hand side, you can see our chart that's breakdown by the project type. We expect greenfield projects will account for more than 50% of the new supply additions. On scrap copper side, which accounts for 15% of China's copper raw material supply, the supply was tight in first half as dismantling plants in Southeast Asia were suspended operation due to the COVID-19, and scrap dealers holding on stocks, which narrowing the gap between refined copper and scrap. China's policy for importing scrap copper has been more and more strict due to environmental protection. The import of Category 7 was banned since January 2019, and Category 6 imports was only allowed with a quota since July 2019. Chinese recycling players have gone to Southeast Asian countries such as Malaysia, Thailand, and Vietnam to construct plants, dismantle scrap copper, and ship back the qualified ones. China's new recycled material reclassification came into force on July the 1st, allowing scrap metal to be imported as recycled material rather than under the more strict waste category. And currently, more than 95% of China's imports of scrap copper comply with the requirements of the new reclassification. So, we expect that the imports of scrap copper will be easier because the imports used to rely on quota, which has a limit, but now, as long as they meet the standards, there will be no limits. But according to our channel checks with suppliers, they may take the wait-to-see attitude now, as the new policy needs time to implement, and the process needs time to get familiar with. So therefore, we expect scrap copper imports won't jump within the short term. So scrap copper supply is tight. The supply of copper concentrate is also tight currently, which have driven down spot TC. When the COVID-19 first broke out in China in February, spot TC increased on concerns of China's copper refineries' lower operating rate or even shut down due to logistic issues and worker shortage. The spot TC on the left-hand chart, you can see rose 16% from $62.5 per ton to $72.5 per ton in mid-March. And after COVID-19 hit mining countries, the tight supply of raw materials have pushed down spot TC sharply, and TC has dropped 29% since mid-March to only $51.5 per ton, the lowest level since 2012. And China's top copper smelters have just set their floor TCRC for the fourth quarter at $58 per ton, up $5 from third quarter's TC of $53, but then still lower than first quarter's TC, which was at $67, which indicates that the copper concentrate supply is still tight, but the tightness has alleviated from third quarter. So China's refined copper output rises faster than overseas supply of raw materials. China's refined copper output rose 3% last year, while the production of global copper concentrate declined, causing an imbalance. The imbalance between overseas copper mine output and Chinese refinery demand is likely to continue this year as COVID-19 disrupts mining operations and shipments in Chile and Peru. We estimate output growth from China's domestic mines, which supplied 17% of China's raw material needs in 2019, will also slow down to 2% this year from 3% last year, so which will further tightening the supply. Therefore, growth in China's refined copper output may slow in this year as tight raw material supply and low sulfuric acid prices force money-losing refineries to reduce operation rates. So on the right-hand chart, we estimate China's refined copper output is set to increase 2% this year, which is the slowest growth since 2011 and down from growth rate of 9% in 2018 and 3% in 2019. Then let's look at the demand side. So China's domestic consumption is picking up in second quarter as virus is under control and economic activities recover, leading the global copper demand. So power grid is the largest consumption contributor for China. On the left-hand chart, you can see it accounts for 46% of China's total copper demand in 2019. And the investment from China's state grid is 450 billion yuan this year, down 7% year over year. On the right chart, but up 10% from the initial announcement of 450 billion yuan in January, which signals that the government is pushing for grid investment post the epidemic and to boost the economy. For the copper cable industry, which are used in the power sector, we see the trend that orders from power grid gradually shift to large to medium-scaled producers from small-scaled producers, as some small-scale ones are closed due to loss-making. And the concentration rate of top copper cable players has increased. And let's look at real estate sector too. So it accounts for 9% of China's copper demand, and it fell to a historical low level at the beginning of the year when the COVID-19 outbreak, but has rebounded since April. And China's real estate investment this year through August rose by 4.6% year over year. The number has turned to positive since June, and we think that the demand from real estate will continue to improve in fourth quarter. For export-oriented demand, especially from home appliance, the demand recovery will continue to be exposed to overseas market and pose the biggest risk. China is the largest home appliance maker with more than 40% of output exported. The demand in first quarter was hit hard by the COVID-19 as consumers delayed their purchasing plans. But the lost demand picked up quickly when entered into the strong demand season in the second quarter, and domestic sales jumped. But export sales were hurt due to weaker demand overseas. And we expect weak demand overseas will continue to weigh on copper demand from home appliance sector. And the situation is the same with auto sector. We can see domestic auto sales improved after the government announced several measures to boost consumption, including policies supporting new energy vehicles, but export market still has uncertainties. Then we think infrastructure demand would be boosting the copper demand. So we think infrastructure demand can be divided into two parts. So traditional infrastructure demand and demand from the new infrastructure plan. The traditional infrastructure construction mainly uses copper in power infrastructure and transportation rails, and we expect this portion of copper demand will continue to grow, but in a slower pace. The launch of the new infrastructure plan this year has led to a new investment boom, because infrastructure construction itself is a counter-cyclical adjustment. And during the economic downturn, government investment can make up for the shortage of domestic consumption and reduce the risk of economic recession. And at the same time, the positive signals it sends to the market and to investors also boost market confidence. And we expect the new infrastructure plan will boost copper demand by 150,000 tons this year, accounting for 1.2% of China's total demand, according to SMM. So China's state grid will invest 2.7 billion yuan on 78,000 charging piles, which would add 90,000 tons of copper consumption, which is the most among the new infrastructure plan. And the 5G stations to be built by China Mobile, China Telecom, and China Unicom will add 20,000 tons of copper demand. And we think another 40,000 tons will come from ultra-high voltage power and intercity railways. And for the potential booming sector of electric vehicles, the output and sales volume of new energy vehicles have shown a recovery growth trend since March. We expect annual copper demand from worldwide EV sales in 2023 could surge by more than 100% to at least 328,000 tons versus 2019. And that's almost 2% of 2019's global refined copper demand, with China accounting for almost 60%. So copper is known as Dr. Copper because its price trend is not only affected by supply and demand, but also driven by its financial characters, including the global economic and political situation, exchange rate, interest rate, and other macro factors. So let's look at the global macro, which could be indicative of copper price trend going forward. And after the outbreak of the COVID-19, the global economy slowed down at the speed of elevator, The economic indicators of various countries plunged, and many countries launched monetary easing policies to stimulate the economy and prevent large-scale economic recession. The battered macroeconomy has also hit demand for commodities, and commodity prices have plummeted in panic. We don't think a recovery, which is a return to pre-epidemic level, is possible this year because the epidemic is still spreading in many countries overseas. But the rebound is underway and will continue in the fourth quarter and into next year. But the rebound is the equivalent of climbing a flight of stairs, much slower than the elevator fall. And manufacturing and retail sales indicators of major economies around the world have improved, and data from the US and Europe have shown positive trends. For example, the US ISM manufacturing PMI in August was 56 on the chart, which exceeded market expectation of 54.8, and the July's number 54.2. In Europe, the manufacturing PMI was 51.7 in August, above the 50 line, and Germany hits its highest level since October 2018. We believe that the current rebound is mainly due to the easing of containment measures, the reopening of business, and a strong rebound in repressed consumption. But there are concerns about sustainability, as data also show caution in costs and spending, weak willingness to invest in high, and the labor market remains weak. And the US election and the recurring epidemic creates uncertainty. On this chart, we use the y-axis shows our daily activity indicator. We set the pre-crisis index in early January at 100, and the x-axis shows new cases on a log scale. And the size of the circle represents the relative 2019 nominal GDP value. So ideally, all economies would move to the upper left, indicating that economic activity has returned to normal and that the virus is under control. So for developed country, the paths out of the trough of the epidemic are diverging. In Europe and Japan, the government controls the outbreak well, and daily activity returned to normal. As Germany and other European countries has controlled the epidemic well, therefore, restarting the economy will be more smoothly. For the US, the epidemic is not well under control and may add uncertainty on the US economy recovery. The US government and the Fed are expected to launch more easing to support economic recovery. And how about the emerging markets? And we think the major emerging markets emerged from the trough of the epidemic also can be split into two groups. So China, which you can see it's already near the top left, has well controlled the epidemic, and daily activity has returned to near pre-outbreak levels. Russia also seems to be moving in the right direction, and India still needs to catch up. And now let's look at China more specifically. So for China, it has controlled the epidemic and the economy has rebounded accordingly. After its GDP fell by 6.8% in the first quarter, GDP then rebounded sharply in the second quarter, growing by 3.2% year over year, and making it the first major economy in the world to turn from negative to positive. And China's economy expanded in the second quarter after the epidemic bottomed out in the first quarter, and a better macroeconomy boosted demand for commodities. The Caixin manufacturing PMI rose to its highest level since February 2011 in August, indicating that the economy continues to recover with both sides of supply and demand improving, while exports play a key role in driving the manufacturing recovery, consistent with the signals from the NBS. China also accelerates the formation of the dual cycle economic model, which combines the advantage of China's large consumer market and technological capability with the advantages of opening markets across Eurasia, thus allowing industries to achieve the gains from trade specialization of production and economies of scales. And as global headwinds grow, China has turned its attention inward to focus on domestically driven economic growth. And China's exports and imports both picked up, with exports rising 9.5% year-over-year, beating expectation and the fastest pace in a year and a half. But imports fell 2% in August, as imports volume of iron ore, crude oil, coal, soybeans, and other commodities rose, but prices fell. We expect China's economy will continue to improve, but the uncertain and unpredictable COVID-19 is always the downside risks for everyone. The COVID-19 vaccine is not yet available, and even it is, mass vaccination will take time, labor, and money, so the global economy recovery will not be the V-shaped rebound, but an elongated process with ups and downs. So to summarize, we expect global mined copper supply to drop this year, but pick up from 2021. On demand side, China will continue to lead the global copper recovery. And the global economy and the political situation will continue to impact Dr. Copper. And for copper price, according to Bloomberg consensus, you can see the group of sell-side analysts forecast that copper price will go down to 6,500 tons in the fourth quarter, and then 6,456 per ton in 2021. So this is the end of my presentation. Thanks for your time. If you have any questions or would like to discuss, please feel free to contact me. Thank you.